Good morning, it's Market Day Report. Welcome to mid-morning. Let's jump into the markets. Let's start with the corn market. It's been in the red pretty much the entire morning. Actually was lower in the overnight session as well, in spite of a couple of flash sales reported by USDA, one pretty sizable one to Mexico. December corn, $4.25 3/4. It's down 2 3/4 cents. 3.5 to 4 cents lower on the deferreds. Over to soybeans, we're lower there as well. Front month off 3, but 7.25 lower on the most active January at 10.03 1/4. What about the wheat market? We've been lower here as well. Double-digit losses really plaguing Chicago with July at 5.69 1/4. We're now at the bottom of that trading range off 15.5. Hard red, July down 11 at 5.68 1/4. And Minneapolis, spring wheat down 6 on the July at 6.16. The front month December at 5.70.5. It's down 7 1/4. Finally, over to the cotton market, 46 points lower on the D's, 68.31, though the 2025 contracts are all holding above 70. Peter Haralambakis is with CHS and joins us this morning. Peter, what are you watching?
Hey, good morning. Yeah, again, we are watching the energy sector, right? The energy complex. As we all know, we did have kind of a push with the DOE stats this week because of Veterans Day. So again, estimates for tomorrow's DOEs are sitting at a slight build for crude of almost 100,000 barrels. For distillates, we're looking for a build of 1.1 million. For gasoline stocks, we're also looking for a build of 800,000. And the big question here is demand. Where is the demand going to show up as we lean into the holiday season, as we lean into a seasonal lull from now until Valentine's Day there? So all weighing on even additional OPEC Plus saying we're lowering our demand outlook. Obviously, the other big piece out there is the China demand destruction or lull in the action is weighing on energy prices overall. So nothing like a good, $10 rally, $10 pullback, or call it $6 to $8 overall over the past 2 weeks to kind of throw into the volatility mix, even though option vol in the crude oil market has abated somewhat. Not necessarily worried about the $100 calls anymore as we kind of sit post election here, and everybody's trying to figure out if prices will kind of continue on their downward trajectory. So that's one thing we're watching here.
All right, Peter, as I look across that WTI off nearly 6% year to date, nat gas, though, has been a little higher, while RBOB lower as well. Thoughts?
Yeah, so again, the crude oil industry will live and die by supply and demand, right? So along those lines, it's certainly a demand lull in the action, i.e. lower by 6%, like you're saying. RBOB itself, once you get under that $2 mark, it certainly seems to be getting a little bit overdone, right? Retail prices across the nation sit at, I believe, $3.19 overall. So it should be fairly comfortable for the majority of the nation to fill up their tanks, right? Nat gas, however, all about heating degree days as we lean into winter. And we did get a boost just the other day over the weekend, adding about 11 heating degree days, which popped our nat gas by about 22%, or 22 cents, sorry, overall on that day. So the ebbs and flows of the demands and fundamentals are certainly a big piece of the energy complex. But as we sit right now, what's demand going to look like over the next few months here, though?
Oh, that's great. Peter, thanks for spending some time with us this morning. Peter Haralambakis with CHS Hedging. All right, we'll take a break, come back. We'll talk livestock futures. Market Day Report continues after this.